way longer than I thought that was gonna take. It's like going live on YouTube is not easy at all. But anyway, okay, good. My mic is not picking up any background noise. Okay, that's cool. Mic check. You said it's too quiet. I wasn't really talking loud, but like, are you able to hear me though? You able to hear me good? Bro, going live on YouTube is not easy, like at all. It's like so complicated. Anyway, and it's like I don't get that quick feedback that I'm used to on Discord, so I gotta wait for the lag of YouTube for you guys to respond to it. It's still quiet. Just turn me up. There's nothing that I can really do about it. Hold on. Actually, 1 second. There is something I can do. Um, I should be a lot louder. Not like anything crazy, but I'm talking at the same. I should be louder. Like I think I'm louder. I should be. We'll see. I turned up my decibels on my mic. It's not louder. Damn. Man, this is crazy, bro. I'm really trying to figure this out. Like, I have no issues on Discord, I have no issues on other platforms, but YouTube, I have issues. It's like, I don't know what to do. I might just have to go in and buy a mic then. Hold on.
You probably hear a lot of background noise right now. My bad. So, how about now? Like, I know I'm still quiet, but a little bit better. Yeah, bro. I just gotta get a mic. Like, as soon as I buy a mic, it'll be cool. But yeah, I think I just found the solution. I have to think about this. All right. As long as we good right now, then let me turn up. I'll turn up my. just turn this up. It's low, but you can hear me. Okay. Just turn me up, like turn me up, and you should be good. I'm turning myself up on my end, but what you trading and what was the reason you got in? For sure, I'm about to go over that stuff. This is so janky. I gotta get me a mic head ASAP. I'm about to order one from Amazon, like as soon as I can. Um, all right, just turn me up. Just turn me up, and then hopefully that fixes things. Um, all right, cool, bro. So, uh, trades. First things first, let's just try to go over what's going on right now to see if there's some like money making opportunities. I believe there are some on gold that are looking really good. Um, like right now type shit maybe potentially. Um, so I had went over in a live stream yesterday that we're thinking that gold is gonna go up. Um, it tapped down into these regions where there's a lot of buy entries, um, a lot of buying pressure going on, and we've already proven that there's sentiment wanting to trade higher than the highest high of this downtrend. So think of this as just a big correction. Prices come and swept liquidity, and there was divergence here, right here. So what does this mean? Um, this is one of my most favorite indicators, and I'm gonna do an in-depth review on this at some point. But this indicator helps gauge momentum in the market and if it's uh how do you say, like if momentum is being lost in the market, right? So when we came down here and we tested these key levels, you can see how price was making lower lows while the indicator was making higher lows. That difference, that cracking correlation is just letting us know that there's an opportunity for, a reversal. So now understanding the key level that we hit, we have some ICC opportunities right now. Very, very basic market structure opportunities. So right now, if you employ some proper risk management, it's looking like there could be some decent buys on gold potentially. Just monitor them closely. We already have the first indication, the correction. This is the continuation. We're likely gonna go up about right here. And then at that point, we'll just have to continue. We'll just have to wait and see. Um, the likelihood of us going up to the low that was broken, the support. I'm on a 15-minute chart for reference. So the odds of us going up to 3310 in Forex numbers is pretty high. In future numbers, that's gonna be about 3322. So I'll type that in the chat, like about 3322 on GC, which is gold futures. And then we got about 3310 XAUSD Forex quotes. For gold as like potential easy targets to get in, and get you a win today or something like that. Um, so now that that's taken care of, going back over to NASDAQ, um, the reason why I got into shorts is just because I know the market should short. It was just a bias that I developed yesterday. Um, I developed that bias here. So I went live on Discord, and Um, I was just establishing that, okay, the market gapped up over the weekend. We didn't go to fill it at all. That's one. Two, this is a rather perfect price line. You don't get these kind of price lines that often, especially on NASDAQ. This price right here, and this is futures, um, 22,759. 22,759 is a pivot point on NQ. So it was a support, perfect. Then it broke, came up, resistance, perfect. Then it broke again, then it was a support again, perfect. You don't get these perfect price levels that often. These are called pivot points when they act as perfect support, perfect resistance. So that was second reason as to why I just understood that there were key structures, key levels in this area price could sell. Third reason is understanding that price overall created a gap. And this was the first test. For those of you who know the strategy, this is just raid number one. This is test number one. So this is liquidity. Very reasonable. Now I have three reasons to anticipate that price at some point is going to come down to these levels and potentially buy off of them. It's going to sweep liquidity, come down to these pivot points, come down to this gap, something like this. This is the opening price of the week, and we're going to have a bullish reaction. Whether or not this is going to be a major bullish reaction, that doesn't concern me. All I know is that I know what's going to happen when we get there. So that's why I marked it out. So now think of it this way, as like, depending on how far away price gets, at whatever time I show up to trade, that could be a whole trade opportunity. Understanding that price has to go to that level. I know what I want to happen at that level, but price also has to go to it. I had marked out another gap that rested above, in between the first high of the week. Like, just like think about what I'm saying. Like, no one's gonna teach you this. You just kind of have to like understand that these are kind of important structures. This is the opening price of the week. These are the first highs of the week. Then a gap was made after we broke the first highs of the week. These are going to be structures that we take plays off of as the week starts to progress, as the week goes on. So just understanding that we didn't get any action overnight. Price bought until it kept buying until this morning, right? So price has been shorting. Price gave us a reaction here. These are the kind of zones I mark out. These are the kind of zones I'm gonna teach you how to mark out. These are the kind of zones that are important, right? So trust me when I tell you, like, this is important. Just like how this is important. Look at the reactions, right? So we're always gonna know where and why price needs to react at these levels and how they're gonna do so. Whether we just have to wait until we get there. If we get there, then we have a trade. If we don't, then we don't. Um, as far as this particular entry model goes, I'm on the 1 minute chart. I can adjust my stuff. Hold on 1 second. So that way, 1 sec. I could raise this up so that way you can see my chart numbers there. And then, I don't know, I guess maybe push this down a bit. And then if I turn this back on, it's kind of in the way a little bit. Maybe I could put it in the bottom right corner. Bottom left corner, bottom right corner. I guess I'll put it over here, I don't know. So anyway, 1 minute chart right now. So if we're going to start trying to look for some trade opportunities, I'm I need to get better at being quick on just knowing how to go straight live because this stuff is complicated. We missed out on some moves. But anyway, I got into some shorts over here just because of everything that I said. I knew the market was going to sell off. It looked like the market was rounding off to me. We had already been making some lower highs. These lows were going to get swept. All right here. Okay. This is the old all-time high, all the way from December. So this is how we're playing around it. Um, I've taught before in the past that what makes a support or a resistance strong, what makes a price level in the market strong, and what makes one weak. And price levels that are tested over and over and over are weak price levels. They are not strong. Okay. The strongest prices in the market are always going to be prices that were only tested once or twice, the least amount of times. Think about it. Go back and back test it. I'll make videos on it, and if you know already. But testing a price level over and over and over, that doesn't make that price level stronger. It makes it weaker because that price is too common. It means that sellers are able to take buyers down to this low once, twice, 3 times, 4 times. If buyers were strong at this price, then they wouldn't allow sellers to keep knocking them down. Right? Just think about it. So, understanding that this was a weak support and that I already had a major bias for price to sell anyway, that was why I was taking sells. Now, as far as my entry, I think I took my entry at I I took an entry at around I know my fill was here. I woke up and I wanted to take an entry at 4:30, but I wanted another hour of sleep, so I stayed asleep. When I woke up and saw that price was still in this region, I was like, bet. And after I got a lower high in the market and price was coming down to this weak support for a fourth time, I just knew that my entry was just basically overall right here. Like this was the low that got broken. There's nothing special about the entry, right? It's just price action. Price was up here, made a low, lower high, price breaking that low is my entry. I got a retest of the low that got broken, and I just took the trades to the downside. It was nothing hard about this one, you know. Um, Basic ICC, basic wait until the highs and the lows are on your side. Um, that's it. That was the justification for the entry. I guess it will be like, there you go. That was it. Then same thing on a bigger scale. We had ICC, right? So now this is your breakout to the downside below what? Those lows. Okay. Then we have your correction. This whole phase right here is your correction phase. Then you take your continuation for shorts back to the downside. You could have entered there. You could have entered here. Just at any of these significant price levels as market structure was breaking down also, right? You could have entered on a retest at a high, grabbing liquidity inside the gap, right? There's a fair value gap right here. You could have entered up here. No one way to enter, multiple ways to enter. make the money that you need, right? So it was just simple price action today. And very, very easy so far. Nothing too strenuous, nothing too complicated. So now, where are we? We're about to push up for a retracement. Okay. We came down, tapped. We're making higher lows. We're breaking. About to push up for a retracement. So let's figure out where we're going to stop. I think I'm happy with this right here. Oh, dang. Thank you. I gotta keep in mind that okay, I need to upgrade my data. My bad. Let's go to NAS. It's already pushing down. I was trying to find what I was looking for because I knew it was gonna reject in this area. Um, so what I was looking for was okay. No, still active. Still active. All right, bet. So this strategy, this entry condition right here. Um, right. So you have a low that was broken. Great, but this is the gap in the market. Price broke these bullish candles. Red, 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 red. Okay, red. Then price came up to here. On the 15-minute, this price matters. Or is it that? Whichever time frame it is. But, oh, 5-minute right here. That's the order block. Okay? So we got this area marked. Now, think about how many uh, beginner and relatively new ICT traders there are in the world trying to take trades, fair value gap trades, and they're in these trades right now to the downside because they've learned how to enter into a fair value gap trade, right? They're, this entry model is based on the idea that those people are liquidity now. So this market cycle, according to my perspective, hasn't fulfilled 50%. It didn't give us a proper correction. It could sell off, double bottom, but my idea would be to wait until this right here to wait until that gets swept, meaning that I would want price to come up, fulfill a 50%, then sell off, right? Look at the 5-minute, or on the front it did capital. Wait, hold on, which name? Look at the 5 or 15 on my chart. It did what we probably talking about the fair value gap or something. Yeah, yeah. So what I'm saying is it went into the fair value gap. It didn't hit. Uh, it didn't hit 50%. If you marked it based on this, it still didn't hit 50. Like it's depending on how you're examining these. The way I mark out my gaps are a little different, admittedly. Um, I don't mark them out like the rest of the world does. So for me, it didn't yet. Um, and so at this point, the best thing to do is just continue tracking your highs and your lows. Lower low, lower high, lower low, lower high, lower low, higher high. So even if price came down and broke this low, it's still not going to confirm a trend. We we need a lower high in the market and a lower low at this point. So I don't know how to like take that understanding and give it to you. Like there are no lies on the chart. So if we're going to continue a downtrend, we would have to restructure the market in a way to where it makes sense for the downtrend to continue, if that makes sense. And the fact that price is breaking highs that led to lower lows, the market needs to do some work in order to be able to push this market down if it's going to keep going down. If it's not just going to crack and sell off. So for me, this is rate number one inside of an area of imbalance. I would want price to come back up, sweep this, fulfill 50. Then I'm going to be thinking about a potential short, right? And that's even sometimes after it starts to reject. Um, so that's the idea. Let's go to gold again because we did talk about gold. And it looks like it looks like this price level is playing out for some buys. It's consolidating, but is there anybody like interested interested in this gold buy here? I might put like just a demo trade on it, just to see how it plays out, right? Stop loss would go somewhere around there. This is big. Hold on. Something like that. For the initial, why did that just close? For the initial test, I do see something on here that I don't like that could drive price down, but I don't think it's the biggest deal. But I see an area. I see something right here. Like I see like a type deal. But the trade has already triggered. We have a weak resistance that was created right here. One, two, three highs, right? The more often you test something, the weaker it is. And we have buyers accumulating, making higher lows in the market. So optimistic that price should keep going up. I don't think that this has a real reason to happen, but um, it might happen if there's some more accumulation that the market needs to do to prepare to push gold up in the long run. So, that's what I would say is it's all about proper risk management. Yeah, I'm on a 5 minute right now. So I'm pretty sure things are okay. I just think maybe in the future there might be a deeper retest. It just depends, but we'll see though. But so far though, I would say I would imagine there's no reason why the gold buy shouldn't work out. Just don't die if they don't. Mm, so Nas is weak, but we'll see. So now that we can kind of chill, right? Like we've done enough talking about the markets. We know what we're looking for. Um, Somehow the volume is no longer low. What you mean? Oh, because I boosted my mic inside OBS by like 17 decibels. I like boosted it. But I think now we can go in and re-examine exactly what was going through my mind when I did take this short. Can I look at German 40? What is that? Oh, the DAX. Um, all right. I probably would do Pepperstone. Um, so I'm just marking out swing points because when in doubt, I mean that's the best thing that can be possibly done. You just mark out swing points. Um, Mark out a little bit of whip sauce. Are you trying to get like my where like where I think it's gonna go? Because I don't have. I mean, I see it's uptrending at the moment, and this is the highest high of the trend back here. So we're most likely gonna target that. Um, I don't see any crazy inefficiencies it needs to fill. It already tested the gap, made a higher low, broke that, broke out of these range, retested, rebalanced. Hasn't created any crazy bearish price action yet. We are at a really major resistance area. Could rebound and buy up to the upside. At the moment, it's looking like it's just tapping a support level, and or an imbalance in the market more accurately, about right here. Watching it ICC on the 1 hour. ICC where? There is. Are you are you talking about over here where I'm putting this blue circle like ICC over here, or where? Or okay, let's go down to the 15. You talking about this right here? This high? All right. I understand what you see. I'm not gonna say it's not ICC, but I wouldn't call it ICC. But yeah, it's not a bad it's not a bad entry if it at all. It probably be more inclined to call it ICC on a 1 minute perspective, but yeah, it's not a bad entry. In the grand scheme of things, it's gonna start rejecting a little bit, but not anything crazy. I don't think. Right? There's gaps right here that I just marked out. You see how we tapped 50% right there? So that's not me saying okay, it's got to do this. That's just me saying all right, it's gonna come down. Just be cautious because the market is the market. It's coming down. Hopefully, it just continues to push up and you know invert this area. Are you marking 50% range from? Well, are you marking the 50% range from the gap or from the highest point of the imbalance to the lowest point? Right? It's a good question. Is really your first time seeing my face? What's up? I'll be, you know, I'm here. I'm a human being with a face. Um, Money rich. So how do I mark up the gaps, right? So um, I mark them out. I mark them out like this. Just give me a moment. All right. Mark out gaps like this. Um, let's just say I don't know. Hold on. One second. How delayed is my stream? Wow, it's actually quite delayed. That's crazy. Yeah, it feels like it's about a whole 30 seconds, 40 seconds behind. All right, anyway. Um, all right. So gaps get marked out like this. Um, there is going to be a candle, right? And there's going to be a wick on said candle. Um, it doesn't matter what kind of candle this is. It doesn't matter if it's bullish or if it's bearish. What matters is if this candle's wick right here is lower than the previous candle and the candle that comes after. So let's just say this is a bullish candle, right? So then that means there's going to be a bearish one kind of chilling right next, a bearish one chilling next to it. That price was coming down, and then it made this area bullish candle, and then we just continue to make another bullish candle for whatever reason. Okay. All right. So what I'm saying is, let me, what is that, five? All right. Ooh. Dang, it has to be that accurate. All right. All right. So that. So then price is gonna do something. Okay. Price is just going to ultimately work its way down, whatever, and then it makes a gap. It breaks this area, right? And this is what I'm saying. This is candle number one, candle number two, and then candle number three. And then, so as soon as this area gets broken, right here, this is the start of my gap. Notice how, like, there could be some things that happen here. Um, it depends on how the market structure plays out. But let's just say if these are wicks or whatever, I don't know. It's like this is the swing point. If 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 these aren't swing points, I'm not marking them out. Even though price would sell below that area, I'm not gonna mark them out if they're not swing points. The point is that I'm looking for this dynamic right here. Dang, why is it so thick, bro? Hey, yo. Oh, all right. So yeah, I'm looking for this dynamic right here. And so that's going to be the top of my gap. And then over here, there's going to be a candle, right? Um, and there's going to, as long as this candle right here is going to be higher than candle number three and the first candle that came before it, or whatever the case is, then that is going to be the bottom of my gap. Just eyeball it. But so that's how I mark out my gaps. It's not so much about a fair value gap. I scale down to the 1 minute and I look for swing points. It has to be a swing point. So in other words, as long as it looks like, actually, where is the image at? I'm going on my Discord, you know, one-on-one chat. As long as it is something like this right here, boom. All of the bottom of my gaps have to look like this, and then all of the top of my gaps have to look like this, right here. If they don't look like this, then I'm not marking it out. So like I'm not marking out, say if there's a candle, like right here, okay? This is not a gap to me. This is not how I'm marking mine. We're not going from here to here. Not most of the time. Sometimes we will, but no. So this is commonly known as a fair value gap, right? This is not how I'm visualizing marking out my gaps. Now, on a if this was a higher time frame, this is like generally more okay. If it's a lower time frame, I'm not doing this. If it's a 15-minute chart, 15-minute chart, 1 minute chart, I'm not doing this. The highest time frame I might do this is a 15-minute chart, and that's it depends. I'm gonna go down to the 1 minute, maybe I might flex it to the 5 minute, and I'm gonna mark out whatever the swing low is and whatever the swing high is. And I'm looking for this. So with that said, let's just go back to the actual charts and we see, right? Um this is still lingering, but let's go and look at what happened last week, right? Well, actually, no, we don't gotta do that. Let's just zoom into this chart that we already have marked up for today. And let me pull the chat back up to make sure I'm not getting lost. All right, cool. So right over here, look at how I'm just kind of thinking about it. I'm trying to imagine what this overall area is. And what I see is, okay, bet I see some highs and I see a low. Anywhere where there is overlapping market structure or overlapping bullish and bearish candles, that's to me an area of balance. In the sense of like buyers and sellers are interacting and I can see it. I see green candles and I see red candles, right? Um, Fast forward my stream to make sure it's like, hold on. All right, cool. So yeah, so there's green candles, red candles, green candles, red candles. However, when we break out of this area, there's only green, 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 green. That shows me that there's not buyers and sellers interacting here. It's just only buyers. Buyers are pushing the price up. If I wanted to be super duper accurate, I could have put this up to this swing point, right? As long as you're marking out this general area in these ways, it's going to be way more accurate than a lot of other people. Then I'm like, okay, now I want to figure out what's the overall area up here, right? I could have said, oh, well, it's right here. But to me, looking at it now, I wouldn't want to mark it out that way. I would consider this a first test inside this range. And to me, this is just nothing more than just an order block that I can break down. Um, so that's not what I would have wanted to see. But either way, I mean, the point is, it's like you just want to mark out the low of the range. I don't know if I'm losing anybody. Some days I explain this really well, some days I don't. But in other words, this right here is an area of balance, okay? And then this is an area of imbalance, and then right above it is another area of balance. Why? Because in the green areas, buyers and sellers were interacting. In the purple areas, buyers and sellers were not interacting. It was only buyers. Okay. So that's how I'm marking out my areas of imbalance. Um, and I'm going from the top of ranges to the bottom of ranges to find a true range where I see that clearly and objectively from the bottom of this swing point to the, or from the top of a swing point right here to the bottom of another swing, this is just a pure gap in the market. And because of that, I I can put weight on the price action that will happen in this area. If I go to a 5-minute chart, let's just do it, and I mark this area out, okay, great. It happens to be a fair value gap. Great. So it would have worked, but how would you have known as a trader that this fair value gap is actually going to carry weight? Because there are times where you have series of fair value gaps. You have so many of them being created as we're buying up or as we're selling down. How would you have known this one is going to carry some weight? And so that was just like, I don't know. I feel like I can visually get my understanding with the more detail that I can see, if that makes sense. I don't know. The market decided to get choppy because why? This market cycle is not complete. Everyone knows the market should sell, but those who really knows that the market needs to buy first to sell. So now there's a lot of indecision. You have people who know what needs to get done, and then you have people who know what will get done, but not how it will get done. So you have a lot of people entering into sells, lower highs, but like I said, right, price just made a higher high. If we track our highs, lower high, lower low, lower high, lower low, higher high. So that means that the market can't just rip down at this time. It has to restructure itself in order to be bearish, which means we need lower highs in the market. So price was going to come up. Now we have a lower high. Buyers know that if it breaks this low, then it creates a lower low and then the market will continue to fail. So buyers are going to try their best to hold this support, to push the price back up, because they know that they need the price to go up anyway in order for there to be a healthy sell that's going to take place. And sellers, those who know, also recognize that that is necessary too. Because of the way that I marked my gap out, from the bottom of this area, the swing point, we had red, 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 and notice how like I didn't mark it out. I didn't come down to here. What I could have, and I got a good reaction based off that, but just because of now my fresh understanding, this is my true gap. And the market has not completed the cycle, and it's going to. If it does and it rejects, then that's going to be a potential sell entry somewhere in these areas, somewhere in here, right? Because now all of the people who entered into the market right here, they are now liquidity. So what am I looking for? I'm just looking for a liquidity swoop. That's it. Gold is playing out. If anybody is wanting to take a gold trade, I think now would be a great time. I think the timing is on your side if you aren't already in one. But yeah, so we'll see how it play out. Like the market could buy, the market could sell. They're fighting. My job is not to try to figure out which way they're about to go. My job is to just be like that. If they break this, I know that the likelihood of them rejecting is pretty high. If they break this low, I know the likelihood of them continuing to sell is pretty high at that time, and it'll come back later. Um, or something that could happen is price could break, create divergence, meaning that the market is exhausted, this is manipulation, and then it comes back, then buys, then sells. Anything can happen. The point is you don't try to predict it. You just wait until price either gets here or breaks here, right? And that's about it. And then if you need to take a trade, then all you do is you just zoom in and you just track your highs and your lows. If nothing else works for you, price action should always work, right? Price was coming down and we made a low, lower high, lower low. Then price went up, made a higher high. So then therefore price just can't sell down. Because then now there's no trend. There is no such thing as making higher highs then lower lows. So price comes down, makes a higher low. Then price makes a lower high. And now if this low gets broken, guess what? This is a lower high in the market. Then this would be a lower low. That would be the confirmation of shorts. But buyers know that. So that's why they're holding the line. They tried their best not to let sellers break right now. So we still don't have a trend being established. We're making lower highs and higher lows. That doesn't make sense. You don't make lower highs and higher lows. That's not a trend. There's no uptrend, there's no downtrend, there's no trend being confirmed. So now we have another lower high in the market. Now we have another higher low in the market, then a lower high in the market, now another higher low in the market. Something's about to happen. Price is squeezing, right? This is how you start to get chart patterns. I don't need to necessarily mark out a chart pattern now, though. Like that's just kind of redundant to me. I don't need to do this. You can if it helps you visually, but I'm just gonna keep tracking my highs and my lows. So like for those of you who know that ICC is really just taking the confirmation of an uptrend, we're either waiting for a pair of higher highs or a pair of higher lows. So until we get both, there's no trade to take because we're supposed to trade with the trend. There's quite literally no trend that's established at a micro level right now. There's no trend. Okay. All of this is noise, and people get killed all the time trying to trade this kind of price action, and there is nothing to trade right now in this area. Like that's why I can just be calm and just sit and talk to you guys because there's no trade to take, right? So boom, price made another lower high because it's coming down. So what we need is for price to break either up or down, and then we need if it breaks up, that'll be a higher high. Then it has to make a higher low and then continue to go up. Like if it breaks down, that'll be a lower low, and it needs to make a lower high, and then it'll continue to go down until you have a pair. There's nothing to really do. Y'all take any trades? Y'all make any money yet? Y'all, or y'all done for the day? Y'all just like listening to me yap? Y'all learning? What's going on with y'all right now? Are you guys waiting for gold to keep playing out? Or are you waiting for a Nash trade? What's going on? Once it, bro, it just made a higher low. That's crazy. Like, how much can price really squeeze? It's like insane. That's just funny. Waiting for Nas. Yeah, yeah. I got in up here, and on futures I was up 1,500. Right, I was up 1,500 right here. So the trade that I took, like the real trade I took, was from here to about right. Oh yeah, about right there exactly. Like right here. That's actually exactly the trade I took. I got in somewhere. I don't know if I got in on this peak or on this peak, but I got in somewhere on one of these two around this region. And then yep, my stop loss, I was chilling somewhere there, and that was my trade. It got in and out. But what's my thoughts on gold? Uh, okay, same. Um, ICC bullish, you know, gold, but eh, okay. ICC bullish, yeah, but I mean ICC bullish. I'm just gonna say that ICC bullish. I do see some liquidity that it could sweep at the downside. I just don't think it's gonna sweep right now. Like, but eventually, I think price is gonna come down to these levels. Maybe test this range right here. I need to leave this. Um, at some point, I think I think price might come down to this area. And I'm not saying right now. Right now we're in an uptrend. It's already established. So, we have higher highs, higher lows, ICC to the upside, TP number one could continue all the way up to the support that was broken. That's perfect. There's no, we're buying right now. Later, I'm thinking that I would like to see lower prices. That's all. So yeah, one more hour. Waiting on the 4 hour close. Okay. Why is it so hot in this room? Oh, bro, I got a whole scarf around my shirt. Um, it's only 8 o'clock in the morning. How many degrees is it here? Probably it'd be hot, bro. It's gonna be 94 today. It's already almost at 70 degrees outside at 8 in the morning. But I don't know, my room feels humid. It's like a humid heat, and we're not used to this. I'm in California, so the heat is usually dry. It's been rather humid lately, and I'm not doing that. I'm not going down south. I'm not going. I'm not going. I can't do humid heat. Like your clothes, bro, they just like stick to you, and your skin feel like you just get out the shower and you feel like you still need to take a shower. Like that's just so. Mm, it's not of God. It can't be. That's just. It has to be demonic at this point. That's just terrible. Can't do it, bro. Not do it. All right, so now Price is gonna on Nas. Price is gonna start trying to make something shake. It's a brand new hour. We're 4 minutes into a new hour. Price can't squeeze forever, and now we have some consistent rejection to the downside. So likelihood is we're gonna break out to the upside. I don't recommend taking buys, but you can scalp them if you want. I probably would actually. I mean, if I was trading, it's not that I wouldn't teach anyone to do it, but like I might do it. But I wouldn't teach anyone to do it because you would technically be entering a trade in a range where there's no trend being established. But it's different when you know that in this moment we're gonna be breaking the range. We're breaking out of it. We're starting that process. So once you get sensitive, then and you know that you're timing the market well. That's the only time that I would recommend trying to take these kind of trades. Otherwise, you have every, you know, beginner trader with this trend line drawn on their chart. Like think about how many people across the world have that trend line on their chart and they see it breaking right now. You're not saying that trend lines don't work, because they do. It's just that like I don't like to use tactics that the majority of the world is using because the majority of the world loses. Anything works if you master it, but the institutions and the market movers or whatever the case is, they know that niggas have this trend line drawn on their chart. So stuff like this sometimes just happens. It'll break, then come right back down, and then boom, next thing you know, like you know. But now look at the perspective that we actually have. The perspective that we have is okay, we have a trend line break, and we understand that we're trading toward liquidity, and we have like, you know what I'm saying? We have some extra confluence to help us understand, okay, this trend line break is valid. Oh, this trend line break is probably invalid. You see what I'm saying? As opposed to just sticking to one little piece of edge, one little tactic, one way to look at something. It's like, okay, now, yes, I have a trend line break. If this candle closes like this, then that'll be a bullish order block. I got liquidity that we need to trade to. I have a resistance that never got fully corrected, right? We went up to it. We didn't. So I don't have my correction if I'm trading ICC. I have multiple reasons to anticipate that price should be buying at least overall in the short term, right? So now imagine how much confidence being this aware brings you as a trader because you know what you know and you know how to apply what you know and you know enough of different stuff to give you an edge that someone else doesn't have. That's all, right? That's the difference between me and um, some ICC traders or whoever is just like I just employ whatever it is that's gonna help me based on the market dynamics that are in front of me. I can't show up and take the same trade at the same time every day because the market don't move that way. So I have to show up and understand a couple different concepts. So when I choose to be available to trade, I'm capable of capturing a trade at the time that I choose to be available. I talked about this yesterday when I went live on Discord. I took the same exact trade setup 2 days in a row, but the first day it was at 5:30 a.m. my time. The second day it was at 6:30 a.m. A whole 1 hour difference. Today my trade was at roughly 5:30 a.m. again. 6:30 6:30 gave me a trade, but it wasn't the same trade setup. It was ICC. That was the strategy that worked at 6:30. This was the break, this was the correction. Literally at 6:30, you got the continuation or the indication of correction and the continuation at 6:30. It was ICC. That was the strategy to use at 6:30 or at 9:30 East Coast time, opening bell. Up here, you could have tracked your highs and lows, but I was using supply and demand. You know, if you missed this trade, well, in order to catch this buy, there was no ICC that would have told you to take this buy entry. That would have been more of a fair value gap type deal, right? A gap in the market, 50% mitigation, confidence, trigger, buy. So let's just say, okay, bet you come into the market and you only know one way to enter, one strategy, you're locked. You said bearish still valid on NAS in your opinion? So bro on point? Yeah. Yeah, no, NAS is still bearish overall. Yeah. And so, but it's just like you gotta you gotta it depends on what your goal is though, bro. Like if you're just coming in here and you're trying to make a little bit of money, don't be a good trader. Wait, hold on. If you're trying to come into the market to just make some money, you don't have to master trading. You just have to be good enough. So what I'm saying is don't strive for greatness if you just want to come make some money. It seems counterintuitive, but you don't need to be super precise. Strive for greatness. You don't need to be LeBron James. You don't need to like be Steph Curry. You don't need to learn how to do it all. Just come in and do what you do and go about your day, go about your business. If you want to be a great trader because you take pride in trading, and that's what you do. You got ego behind this. This is your career. This is your arena. This is where you flex what you know. Then you there's no escaping mastery. That's my opinion. People say like you only need to know one thing. You just come into the market and learn one thing. I don't agree. I'm not saying that's not an approach that works. It is. I've seen it. My mentor does it. I'm just saying that I don't agree. Right? Yeah. You see how what I just talked about earlier, how that's happening, is why I wouldn't recommend taking this buy, right? Because we're technically in a range where there's so much indecision. There's no trend that's established. And like I said, everybody has that trend line. They see it. So imagine all of the people that's losing money right now, right? A lot of it. All of the people who trying to get in, they have their stop losses below this area, below a low or something like this below, and they just got wrecked, right? And they might keep getting wrecked. I don't know. We'll see. It don't matter to me. The only thing that matters is if we break this level or this level, right? So never do, never do, never take the trade that looks obvious. That's something that I learned from my first mentor and got confirmed over the course of the years. If there's a trade setup that looks just a little bit too perfect, a little bit too clear, I'm not gonna say perfect, but like it's too obvious. Too many people are on the same page. Don't take that trade, bro, because every the way money is made is more people have to lose than people who win. So if you see something that's really obvious, understand that you want to try to analyze the the trade that goes against what most people are gonna do. You know what I'm saying? So yeah. You said you keep making ICC. Or wait, I intentionally keep it ICC, no complication. In fact, ICC is great, but I'll be the first to say ICC is very incomplete. The way it's the way it's been massively publicized. But it do ICC if you got money, perfect, because now you got wiggle room. You're able to take your entries and exercise patience and let them play out. A lot of people don't have money um, to exercise the patience to let a trade be in drawdown, let it take hours to pan out, you know, and whatnot, and then still when it does pan out, you're actually reaping a return that feels worth the the wait, you know. Um, so when you have capital, it's probably it's capital is a problem. Having capital issues is an issue. Ha- if you have capital, then you can trade ICC from that swing perspective, from that higher time frame perspective, exercising patience, and you're still, when it's all said and done, you're reaping a reward that feels like it's gonna satiate you as a trader and your needs. If you have a small account, you're doing small account builds, anything less than $1,000, $500, $100, $250, and whatnot, you do need to you need to add more to ICC because it's not complete in the sense that like it leaves out some things. ICC doesn't, the way it's taught, doesn't teach you anything about how to time the market. It just teaches you what price you need to trade at. There are ways to understand that I know what price I need to trade at, but now how do I time this entry so then I can actually reap a reward for my work and put on a little bit of size, right? And so I can build my account. Um, what is the right time for me to enter into these trades so I don't have to sit into drawdown? You know, it's not as simple as wait until it's New York session. Nah. It's not as simple as only trade in session. It's not that simple. Um, it could be, but it's just not. That's the reality of it. Most of my trades that I enter, that I take, aren't even in session. I would say like 30% of the trades that I take are in session. 70% of the trades I take are out of session. They are in a session, but they're out of a prime time, like a prime time during the day. Like I'll take a lot of trades between I'll take a lot of trades between 3:30 a.m. Like when I'm executing my trades and entering them, I take a lot of trades between 3:30 a.m. and 6 a.m. or 6:30 and 9 a.m. East Coast time before market opens. That's like that be like my personal like preferred time window. But that's just because of my style of trading and just how I perceive things as well, you know? But it's like there's gold trades, like, oh, trading session on gold. No, bro. Like you get some of the best gold trades that trigger in the afternoon during Australian session. And no one told you that Australia has the world's largest gold reserves. No one told you that Australian news moves gold. No one told you that. You see what I'm saying? So now all of a sudden, trading gold during Australia session and that overlaps with Asian session is now gold in. No pun intended, right? So as long as there's volume in the market and the setup has set up, take the trade. You know. How do you find the right times when using ICC? Do I have videos on that? I do have videos on it actually. It's about tracking your highs and your lows, tracking the internal market structure, right? The fundamental concept that you have to understand to trade ICC properly is tracking the order in which your highs and lows are created, and and unfortunately over the past years there was never enough teaching on that. It's been anybody who has come to me for a one-on-one and they've been like, hey, I don't know like what I'm doing wrong. I just can't seem to get ICC to work. Like Sai tells me what to do, not why why it should be done, like, and I see it works for him, but I don't understand. And so when I go to try to do it, it doesn't work for me. Like, and when I watch your videos, it's like you tell me why I should do something. So I'm just trying to figure out, like, what am I missing? And then I'd be like, all right, show me some example trades, or just tell me like what'll happen. And just with them telling me, I know exactly what the issue is. And the majority of time, what the issue is two things. They don't know what high and what low to mark out, because it's not as simple as just tracking highs and lows. There's certain highs and lows to mark out. Then they don't know how to correlate the big picture and the small picture. Understanding that people just say, oh, the high time frame overrides the low time frame, but people don't understand that there will never be a high time frame if the low time frame doesn't align, right? Like, think about it. Every high time frame trade, or every high time frame trend you've ever seen, I will bet my life on it. The trend started on a 1 minute chart. It started on a low time frame. It confirmed on a small scale. So now when you say, oh, the high time frame overrides the small time frame, the other way around is, bro, there is no high time frame without the small time frame. If the small time frame doesn't support the high time frame narrative, the high time frame will fail, and it happens often. And those are the trades that you'll wake up and see that Sai loses. When he calls a trade, and then next thing you know, it turns into a loser, is because homie is putting weight on that higher time frame, and he didn't correlate the low time frame price action to see if it was a valid position. I did, and called the opposite trade. I did, understood that it was gonna go the other way, right? But it's just like, I'm not the one who made $14 million, so no one's gonna listen to Romel. You know what I'm saying? Um, and th- I'm fine with that. I ain't got no issue with that. Uh, but so yeah, I do have videos on that. I'm just gonna go find one, and I'll paste the link into the chat. You can go watch it on your own time. If you want me to turn this into a teaching session, I can. Just pay attention to your guys' trades. I could turn this into a teaching session right now and start and show you exactly like what I'm talking about if you have the time. If you want me to do that, type in the chat, do that. Like, I can do that. That's no problem. But let me go find which video. I think it's one of the best ones. It's probably, let me see. I got three or four videos on my channel, all teaching the same thing to different people. It's the same information, just regurgitated in different ways that different people understand, but it's the same thing. So I'm just trying to figure out which one. Um, this is like one of the first videos I made on this that I posted, but let me go find the D one that I think is really. And I also have some recorded one-on-ones. I've done one-on-ones with people. Actually, it's like, I'll go ahead and post an unlisted link right now. Here's a one-on-one I did um with someone who It's an ICC trader that came to me and was like, "Hey, help me." Um, it only has 4 views because it's an unlisted video. But here's the link to it if you want to watch it on your own time later. And let me see. Um, I'm pretty sure this. I mean, this is the biggest problem that uh, all ICC traders have. And in all these videos I'm sending right now, it's literally the same thing. It's me explaining the same thing that I could go over right now for hours. It's just track the highs and lows, bro, and you'll be straight. Uh, I- I'm damn near sending like every video that's on my channel, but which one was it that went not viral? But okay, this one. So this video that I'm about to send with 3,000 views, so it's a good one. The application of what I'm talking about is in this video. This is the one. So sift through those, and then I'll go back. Well, what do you say here? How do you find? No, I already feel that. What do you say the weakness of ICC and strength? All right. Hashtag retest. I don't know what you mean when you say hashtag retest. What you talking about? Like like how we don't take breakout trades or something, and we only take retest trades. Um, but the the strength of ICC, in my opinion, is not the it's not size model. Can I show you on Discord? Yeah, sure. It's not size model, anything technical. It is just the literal vocabulary words, bro. Indication, correction, continuation. Internalizing and embodying those vocabulary words actually helps you apply ICC to any strategy. Because at the end of the day, the only thing that the market is doing is breaking and retesting price levels. Okay? That's it. Um, right? That's all the market is doing technically. Breaking and retesting price levels. So ICC is vocabulary that helps you mentally understand how to go about break and retest trading. That's about it. I think you can see this. My stream. Let me see. Let me update my stream. Okay, yeah, you can. All right, cool. So it's just break and retesting. Now you can break and retest. Uh, we're on YouTube. You can break and retest a ton of price levels, bro. You can break and retest highs and lows. You can break and retest ranges, price ranges. You can break and retest ranges of candles. You can break and retest the ranges of wicks on candles. You can break and retest gaps. That's all it is. If you look at a fair value gap, What is a fair value gap? It is a price level, price range, price region that gets ultimately what? Broken and retested. Oh, wow. So now once you conceptualize that this is all that is happening on a chart, and I take you to a chart and I'm looking for levels, all we're doing is just, they're going to retest and then they're going to break. So now how can you apply ICC to this? Case in point, price can break out of a range, correct back into the range, and then continue out of the range. This is a range of a gap, a fair value gap. Now watch this, ICC. This right here, after the gap was created, this is just the indication out of it. This is just price continuing away from the creation of that price range. Boom. Breakout. Then price comes all the way back and it corrects into the price range. Correction is not size word. It's a word people use. Market corrections, right? Retracement, pullback. Same word. They're synonymous. The market corrects, pulls back, retraces back into this range. Then the continuation, the confirmation trade, like when you hear take the confirmation trade, don't take the breakout trade, take the confirmation retest trade. You know, don't take the break out of trend lines, take the confirmation break. Like that if you've heard that before, that's the continuation. Price corrects back inside, then it continues outside. Like once it closes back up, that's the continuation back above. The confirmation happens here. We just confirmed the price range. Break, retest, confirmation, indication, correction, continuation are literally they mean the same thing. Indication, breakout, correction, retest, and then continuation, confirmation. It's so the strength of ICC is not so much let's trade how Sai teaches. I think the strength of ICC is just literally the vocabulary, because now when you think about what an indication is, like, okay, it helps you understand that this is the market signaling, just like how you turn on your signal or your indicator, your blinker in a car to signal to traffic and state what your intent is before you move. Buyers, sellers, they state their intentions. They indicate. They say, hey, this is what we intend to do. And then great, guess what? Buyers indicated that, hey, we want to take this up. Okay. Everybody else on the road, all the traffic, they said, all right, bet, I'm going to get out your way, big dog. The traffic had to get out, you know what I'm saying? Then at some point, it's going to be the time for you to move. You don't just start. Woe to the bad drivers of the world who just turn on their blinkers as they turn or as they merge, especially people who just merge and weave in and out of traffic with no blinker, right? But there's going to be a point in time you're looking over your shoulder, you're making sure you have a responsibility to make sure that the coast is clear and the time is right for you to merge, for you to change lanes safely. You have a responsibility to analyze what time, if the time is actually right for you to merge. Anything can happen on the road. You could have the space, and then next thing you know is like, all right, there's a freaking, Corvette or Mustang or Honda Civic just speeding down the highway, and it wasn't there, but now it's there. But if you would have looked, and looked over your shoulder, you might could have saw what was coming, and you would have known, let me be a little bit more patient than usual, right? Just like, so you have a responsibility. So I think indication though is just a good way for us to understand what a breakout often is, because highs and lows are broken all the time, and you don't take every breakout. So most of the time they are just indicators, right? Cool. Then the correction, retracement, whatever, is just to help you understand that the market has to reset itself, right? And then the continuation is letting you know that there is a potential, depending on what stage of a trend you're in. If you catch a trend near the beginning stages of it, then the likelihood of your trade continuing in that direction, breaking more lows, continuing to trend is high. The third thing that people haven't really understood is that they don't understand trend cycles. So they'll see an ICC trade but not understand that this is the last leg of this whole uptrend, this whole downtrend, and they'll hold it too long. But the thing is that there is there was a way that you would have known that that trend was going to end at those price levels. You just have to, it's there. And it's not the hardest thing to do. It's not the hardest thing to go find. But if you focus in and you only look at it through the lens of just how it was originally instructed, then you'll realize that it's not complete. It gets you far, especially if you're a beginner, it gets you really far. It's just not complete, you know? And the thing is like, you're gonna take trades and then they're gonna work out and you're gonna be like, this is the best thing ever. And then you're gonna take trades and they're not gonna work out and you're gonna be like, why? And the more you start taking those trades that don't work out and you start asking yourself, why, that's when you come to me and be like, hey, yo, Romel, what's going on, bro? I don't know what I'm doing. I thought I did, but I don't. And then I can help. Hi, Tori. Tori is my mentor. Um, Not so much like not like a technical analysis trading mentor, but like more like a trading psychologist and um, something like that. You said you sent me something on Discord. Let me look. Let's see. Greetings, Romel. This is what I was trying to explain. Okay, so you're looking at gold. That's valid. Let's go look at gold. Gold is taking its time. I'm not used to anything that moves this slow. I've been trading NAS for so long. Um, but yeah, so I like what you see. That makes sense to me, for sure. Price is gonna go above that level though, Uzi, and then it might come back down, for sure. Um, but that's, yeah. Um, it is the lowest low of that trend, so Uzi has this level right here marked out, basically, right? And this is what he's looking at. this yellow area right here, and he understands that price broke that, and then we're coming up. We came and we retested this, and then we sold off a bit. So yeah, it's a good retest example. I do think we're gonna break above it though, and go up to these levels up here, somewhere in this range, and then probably experience market stalling and turning back down. And then if that happens, that does support ICC, because this is a higher imbalance, or this higher lows that were broken. They rest inside this gap, and if we analyze the gap, we see that all of these levels that have to get tested are above 50%, which means that it would coincide with, how do you say, the timing and the condition being met that cells are now valid, because we retraced at least 50% of that gap. So that's confluence, and somewhere in these regions that could be the high, and then price can potentially come down, make a lower high in the market, and then potentially fail and come down to these areas where I think price should come down to before it ultimately buys up. So that might be a pretty solid outlook as to how things might pan out, actually. I wasn't paying attention to that. So that's cool. I wish I could send pictures inside of the comment section, but I can't. All right. So Nas, okay. So now we got to get back into trading mode. The Nas play is coming up, right? So basically, we did a whole bunch of BS. Oh, understand trend lines. That's what I was gonna say. Imagine if I could take this and rotate this image to the left a little bit, to where this trend line right here, that's yellow, was horizontal across my chart. Then it would completely make sense, and you would never fail at taking trend line trades again, because you're not expecting a perfect retest, but now you understand that price gave you a indication above your trend line, which is no different than a support or resistance level. Then it gave you a correction below the trend line. Then it gave you your continuation back across the trend line. Just in case, if you are a trend line trader, you can ICC trend lines. It's the same thing. Bend the rules a little bit. I don't know if you thought about that though. A lot of people think that it needs to look really, really nice, and then we get really nice breakouts and retests and then push up. Your trend lines don't have to look like, they don't pan out with this type of precision anymore. That's very eight, like 8 years ago. Now, right, instead you understand that this is a whole, like, indicator across the trend line. Then this is your correction back below. Maybe tracking your highs and lows in this dynamic doesn't really matter too much. And then when we come back across the trend line, you can ICC trend lines, just in case you didn't bridge that gap in your understanding. But anyway, so we're going to let me delete all this stuff. I don't this was just a demonstration. I don't need this. All right, that's fine. So uh fast forward my stream so it's up to date. That way you're not lagging behind. Fast forward it up real quick, like drag it and scrub it all the way as far to the right as you can. Um, so that way you can get hopefully my most in the moment thoughts if you're listening to me. I don't want to be lagging too much behind um, or whatnot. So, word. So, we're just waiting. What time is it? I see. So, if you see how my mind works, I'm looking at the market. I'm understanding that my trade idea is about to present itself. My mind instantly goes to, okay, what time is it? Because there's price and time on a chart. They have to align. So I'm seeing we're actually approaching lunchtime. On the in Wall Street, that's the lunchtime reversal. And lunchtime just so happens to correlate with the end of London session. A lot of people don't understand that London session ends in 10 minutes, right? It ends in 10 minutes, like 10, 11 minutes. That's crazy to think, right? We're far into New York already. And you mean to tell me London session, the overnight session is about to end? Yes. So there's gonna be, you know, it there's a lot of trades being triggered, a lot of trades being closed, a lot of conditions are gonna start being met around this time. So it just makes sense. Okay, bet we're coming up here to this area, um, where I have my trade idea, and the timing does make sense, for me to execute. So now I'm not gonna be so afraid. I would be more afraid if it was like, I don't know, if it was just like a random ass time. But I'm looking at it and I'm trying to think to myself, okay, what happens at around this time? And I'm like, okay, bet that's valid. You see what I'm saying? So my mind is, you gotta bring it all together, you know? That's just how it works. So I'm just like, so I'm waiting for price to get up to this 50. Um, Let me examine the higher time frame real quick. Ooh, hold on. This 1 hour chart I don't like. This is lower than this is well. Okay, 90-minute cycle, 45-minute. You got a railroad, 1, 2, 3. This is just liquidity being grabbed, yeah, above the whole bearish order block. And 30-minute imbalance, nice fair value gap actually on the 30-minute chart. To be honest, I should have been cycling through my time frames a bit more. 22. All right, just drop it down to the 5, drop it down to 3, and all right. I don't like the way the 1 hour chart looks, but that is not it. It gets to a point to where it's like, okay, it's a 1 hour chart, and I'm just gonna choose to call it arbitrary. Time is a time. Time is a social. Time is a construct. So I don't care if I don't like the way the 1 hour chart looks. Now, technically, I would be probably trying to just get my entry in and get it filled. Sometimes you tend to lose out on these type of entries if you try to be too precise. because you just never know how precise you mark your areas out. All I know is that this high had to get swept. Now it's been swept and price is rejecting. I might wait for a candle to close or two and maybe just be a little patient. And then it's like as soon as I have some confirmation that I have like candles closing below the lows of prior candles, I might consider entering into a short. Um, or waiting until price gets into that premium territory, which is this dotted line, to just enter blindly a small position and then scale into it as the trade pans out. All right. Now, I could have been taking trades up here, you know, but why risk why risk it? If I would have been more cognizant of the retest right here, and then I would have got in on the higher low and then the break of this high, right? That's a whole entry. We get a higher low after the confirmation, and then a breakout of this high. That's the confirmation of the uptrend as far as this is concerned. That was a great entry, but I didn't see it because I was talking. Well, I'll leave it back. So now we're up here. We push back up, and I'm just kind of hoping that I do my range accurately because sometimes you do have, not all the time, but sometimes I'll be having to go down to like a 15-second chart to mark this out, and just be I'm knowing there's structures inside these wicks. Maybe I shouldn't have put it here, but maybe it's more like right here, or however this looks like. And if that's the case, then we just fulfilled that 50% level. So there's wiggle room sometimes in this. Maybe that was the proper low to mark out, not that one up there. It's just overall whatever low that needed to get broken. Actually, yeah, I think that's more accurate because that's the low of the candle that overlaps the all-time high price level. Okay, so, but I'll just go back and mark it out how I originally had it, and we'll just wait. But entries are triggering for sure. So let me delete this position and just enter a new one just so we have a fresh reference. And we'll see how it works out. It's like a demo trade for me. I'm just testing. Stop loss is supposed to reasonably go up here. But the idea is that if it's time for this trade to trigger, then it will sell, right? I will put it up here though, just in case it does, just in case I enter prematurely and it has to come up to this 50, but whatever. Like I see it coming down and I don't want to suffer from too much precision. The fact is the main condition was met, which was what? A sweep above this high. And then it started to push down. So I was reading the candlesticks here. It swept the high. We had two inside candles. Buyers tried to push it up some more, but then sellers came down and engulfed the the low of the bullish candle responsible for the sweep. So as far as candlestick reading is concerned, like sellers to me are clearly dominant and getting into the market, right? They're suppressing buyers. There's a mixture of two things happening. Buyers are exiting positions, sellers are entering positions. The candlesticks are reflecting the strength of buyers and sellers, right? And that sellers are stronger than buyers. Sellers are able to do a little bit more than buyers were. And just as long as the condition was met, I got in before it got out of my range. I tested my entry. There's not the most confirmation in the world, but then as soon as it starts to play out, now you just found yourself potentially locked into a decent little position. And so now that the market cycle might be complete, we can start to put more weight on any price action, any bearish price action that we see going forward, right? If we do see lower highs and then lows getting broken, we could put weight on those things because price does have to gravitate to lower levels. Well, it doesn't have to, but that's my bias. And just like how I thought price had to gravitate to here, it didn't have to, but it's what I thought it would happen. I think price should gravitate to these areas. Doesn't have to, but is what I think will ultimately happen. So I'm taking the trade that is in alignment with my overall direction of the market or my overall bias of the market, at least for this day or for the time, which is why I let these buys go. I don't take the buys, I take the sell. I only take the trade that makes sense to me. I only take the trade that's in the direction of the market. This right here would have been the trade of the day though. This same concept triggered right here. I see it. So this was my trade. But then watch this. This is the same concept. You mark out a gap and you wait, like this is the first raid number one. It didn't hit 50%, right? Sold off a lot, right? But then watch, it comes up and hits 50%, really, really close, and it sweeps this high, grabs that's liquidity, and then we're entering into trades before either at these price levels in faith, but for sure before it breaks too far away of the range, because that's where it needs to be. Then the idea is that this is potentially something that you could experience, and then this was your trade opportunity based off the same concept, the same strategy, the same concept for why we're trying to enter into this position. It's a bigger overall play. Price is coming back up. It might come back up because it didn't hit 50% in my eyes. So it could come back up. That's why I got this stop up here, right? If this had hit 50%, then I would have entered a lot sooner, like, but it didn't. So we'll see. It's going back up, and we'll see. I definitely don't like that 1 hour candle. It just closed. Let's look. Okay, at least it closed with some rejection. I didn't like how bullish it was looking, getting close to 9 o'clock, but it closed with some wicks. It didn't close above the high of this candle, so that's cool. Is this wick sauce? This is not wick sauce. This is something that actually a friend of mine just taught me. Like, what? It's June right now. He taught it to me like in April, or like the end of March and in April. It's his it's his strategy. Um, I've I've nerfed it a little bit. It's not as precise as him. I took it, I learned it, and I dumbed it down to what I thought was important. Um, so I don't teach it or trade it exactly how he perceives it, but it is like his concepts. Do you think the 1 minute time frame is solid? So I don't recommend it. Time frame is a time frame, as long as you put it in the proper perspective. Um, all of your low time frame analysis, actually, hold on. You should never do analysis on a low time frame. If you're trading ICC, the only lines that you have on your chart should only be based off of 1 hour chart and higher. You shouldn't put any lines on your chart, any support lines, resistance lines, or anything like that on your chart while you are on a low time frame. And if that's what you're doing, then that's the wrong way to go about it, and that's why it's not recommended. But I recommend executing your trades based off those high time frame levels on the 1 minute chart. I don't recommend analyzing the 1 minute chart. Like all of these lines, if you're only doing pure ICC, the stuff that I'm doing on this 1 minute chart, this isn't ICC. This is other concepts. So boom, like it's other concepts. So I can analyze this 1 minute chart. But all of your low time frame charts should correlate to corresponding higher time frames. 15-minute chart and 4 hour chart. They, those match. 5 minute chart, 1 hour chart. Those match. 1 minute chart and 15-minute chart match. Then when you get good enough, you'll realize you can go from 4 hour to 15-minute down to 1 minute. And they all will match in a line. But it takes time. So now this is the actual thing that I'm looking for. This 50% tap. But now, price has to sell. That's the thing. Like normally you would wait for some rejection. And I'm not inclined to take it right now either. I would need rejection because how do I explain? The best signal would have been like if this would have just came up to it and then fell and done as my white line is displayed. Instead, it went into it, continued to establish more uptrend, making higher lows and higher highs. Now I need more work to be done. I could enter in on faith, but I need either a lower low and a lower high, or I need exactly what I have here, basically. I need a price to make a lower high first, then sell. I need price action now to support this because of the way we came into this gap. So, and it's a more overall play. The plays that I take with this concept tend to be real short and sweet like this, real tight. Like it goes in, rips. You know, um, when they pan out in a overall, like it takes more time. It's a bigger play. Uh, I can't just enter and execute like how I normally do. I gotta wait. I gotta wait. So, but if this was gonna sell off and continue selling, that would have been cool. But this candle going back up, not making this lower high at this level, that did it for me. That's like a cutoff. It's like nah. So now, yeah, it did feel 50%. This is sometimes I do just enter here. But now I feel like I need more confirmation. could do would be like, and once again, I'm demo trading, but I'm trying to trade this like if I was actually trying to take a trade today, or like if I was trying to wait for this setup, which I wouldn't. Actually, my live stream is supposed to be over. I usually have a hard cutoff at 9 a.m., but that would be like an example of an entry that I would take. Yo, what's up, Zeke? Oh crap, all my stuff went away. Discord. Okay. And OBS. Alright, cool. Yeah, no, I'm not liking price action. Lunchtime reversal. Eventually, yeah, no, I'm done. Dunzo. How's gold going? Is gold buying? It is. This 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 was the more sure trade today. It's just taking a long time though. Like, so doing a lot of ranging to get to TP, but that's the best trade. Not the best trade, but the one that has the most confirmation. So now if I was to analyze this like the dude who taught it to me, then what would I be doing? Let me think. So if I was analyzing this like the dude who taught it to me, he would be okay. If I was analyzing this like the dude who taught it to me, or actually if I was doing Wixos 2.0, then I would have to mark out this particular wick and then understand that that's where I need to sell or short from, and that there's an order block in that area that I need to go find. The 22-minute tells me it's right there. So now let me put a line in there and then keep scaling down and make this, my chart is getting cluttered. All right, you know what? Start over. So, boom, boom, and boom, right there. That's the breaker order block, or whatever, breaker block, blah, blah, blah. Uh, he would be looking for, and then the last thing he would mark out would be something like this. So he would be taking a short from, he would be taking a short from a higher price than I was looking at. He would be taking a short from somewhere up here, somewhere above, somewhere higher than what I was looking at. Something like this. Either here, something like by that price, and this being like, yeah, something like this. And then he would be trying to get into that, and he would take it all the way down to here. Something like that, I would think, is real close. Something like that. And the thing is, like, he's so precise that, like, I'm not that precise, and I'm precise. Like, he's like so precise. He gets into trades like he gets into trades with only like 1 to 2 ticks of drawdown. That's how precise he is, and I just don't know how to. I don't know. I don't know it yet. I just don't get it yet. So that's why I'm just like a little bit. That's a lot. But I would think he would be trying to get in up there. But I don't know. We'll see. And then let me draw the range that I had. I had mine drawn like this, just like this. It's a big red box. So I'm just like, I'm gonna take a sell in this area. He's gonna be like, no, I know exactly where to sell it. So let's see, because I thought that this was good enough. This 50% line. I I I thought this right here was good enough right here. So let's see. I'm sorry. How's my stream? Is it lagging? Is the quality fine? I'm not on the user end, so I don't know how everything gets done. It seems like because I also have my stream playing, and I don't know, somehow it naturally puts me 5 minutes behind what's live, and I have to like scrub it all the way to live. So I don't know if they're doing any sort of like techno technological lag delay compensation. So I'm hoping that my stream quality is like not bad. It does look like it's starting to trigger short. What time is it? Okay. You know what? I'm gonna go ahead and do it. Dang, wow. I didn't get the fill I wanted. That's crazy, bro. All that waiting just to get back in at the right price. I mean, at the same price. Dude, that'd be irritating me so much. That irritated me so much. My entry was supposed to be right here. Yeah. So I'm gonna let that just play out. Okay, gold is playing out. Gold buys. TP1 is about to hit soon on gold. Hmm. All right, boom. Sell. Sell Nas. I just had to see. So this was just one of those moments where the lesson was okay. Like in this, it's just a confirmation for me that both conditions need to be met. It's not a if or the other. It's like yes, you need the liquidity to get swept, but I also need the 50% to get fulfilled. Both have to happen. Until both happen, the conditions for the strategy aren't met. But once they both did happen, now we're starting to sell off. Sellers are kicking in, they're kicking in strong. And that's the idea. It just took a little bit longer because it's a more higher scale play or a play on a bigger scale unlike the smaller scales that we're used to. So anyway, let me control Z my life away and put all of my analysis back on the chart that I originally had. There. But I'm not. Alright, whatever. So let's delete that. But no, you don't have to. Delete that. Think that's ultimate. We have this marked like this. Um, so, I mean, shoot, like, I guess, yeah, this is what I wanted to happen, but it happened this way. This or this. So now that's playing out. And delete that. Great. So that would have been an example of another trade. This is supposed to have been shorted, to be honest. It's not a bad entry, but it's still like to me this is a bad entry. It was supposed to be filled so much sooner than this. It was supposed to be at that 50% line or at the low of the range. And the low of the range is the worst fill. The best fill is 50%. The second best fill is the liquidity level, the high that needed to get swept. So at one of these highs as we were coming back below it, and then the third and worst fill is at the low of the range, and I got filled in. Okay, well, no, I guess I got filled above the lower range. If I make it shaded, I'll see it easier. Big red box. Red box means sell territory. So as long as we were getting filled in as we were breaking out of it, That's like the worst fill with the strategy that you can get. You're supposed to be able to, you're supposed to be getting filled at these higher prices. Um, so anyway, yeah. And that's going to be very crucial, especially if the range is big like this. If the range is small like this, then okay, you just get in. It's a tight range. You don't got to trip about it. But when the range is big, making sure you're getting filled, you know, well, that literally sometimes makes the difference between blowing accounts and stuff like that. So you took it with me the second rate of the first one, got in hella early, yeah, you know what I'm saying. But now everything is cool, so we can start putting weight on our price action. We can put weight on lower highs in the market. We can put weight on lows getting broken. We can put weight on anything bearish that we're gonna see going forward, because the market cycle of this area has now been complete. So now, as far as timing, now the prices and the price being broken and all these different things that you're gonna see, now it's time to trade. Like, you know, certain market conditions, certain market, what do you call it? Significant chart events, certain significant chart events is the equivalent of the gun going off at the start of a race. A lot of people are trying to execute while you're still lining up at the start line. This, but once the gun goes off, now you can put weight on everything that you need to do. So, yeah, it's an interesting strategy. It's an interesting approach. Um, it fits well if you're comfortable entering into trades without confirmation, confirmed breakouts and different things like that, then uh, if not, and you need some more confirmation, there are so many other great ways that still get the job done in the same fashion, where you can enter into trades at the right time while getting confirmation. You may not get the best price of the day, but you're gonna make your money. You might have to be a little bit more patient, but you'll be good. You smooth. I don't I don't know if you still hear Zeke, but I'm looking forward to the big group call that we have later today with everybody. Yeah, yeah, I'm looking forward to it. Well, I think what I'm looking forward to most is I'm trying to see what type of timing Rio gonna be on. I want to see how he gonna like present himself. VIP. Now this is like a tight, more close knit group with like 7 people. Yeah, 7 people who we know that these 7 people are serious about their life, about their trading endeavors, and about self improvement. And there's a lot of good diverse opinion, which is constructive, and there's respect given, even when there are differences stated. And ultimately, it's just iron sharpening iron. So it's just like a close knit group, or uh, just uh, just seven bros trying to be there for each other. And these are just people who I think it's only people who have poured into me. So it's like because I do so much pouring into other people, like I only have a select few people who pour back into me, and those people who are capable of doing so, I also like see what qualities they have, and I create an ecosystem is it just to make sure that okay, like these are people who I know at least for the bare minimum that I'll keep close because they have already poured into me and have proven that they can. Um, so word. Wonder what Zay in his HB. Oh, homeboy. Yeah. I talked to Zay for like I talked to Zay for like 2.5 hours that day, or 2.5, almost like 3 hours. He good folks, bro. He good. I can tell. And then we have talked about like common interests. So Zay is gonna be very instrumental when it comes to like infrastructure, offices and commercial and private or commercial and residential real estate and other ulterior business plans and different things like that. Um, taking the money from trading and putting it into projects, right? Um, so that's where his head is at. Development, like what can we do in those ways? So that's like that's like a big area that he's uh, that's where his mind is going. You know, if his homeboy, I don't know. So yeah, this is the boring part, bro. You just kind of like sit here and wait for like a trade to pan out. How long you gonna be live? I'm gonna probably turn it off. To be honest, I was supposed to be done 30 minutes ago, but the market was being how it was. Um, but I'm gonna just I don't know. I might I might turn it off soon. I might turn it off soon. I mean, yeah, 'cause ain't really nothing to do now. There's a trade being triggered. It still needs to confirm downtrend. It needs to make a lower high and a lower low and whatnot. You know, gold hit. Gold is on its way to TP, and that's just really about it. I'm not teaching right now. Oh wait, I think someone did want me to teach. Who was that? Cassius. Are they still here? Uh, yeah, I'll just make some videos. And same thing, Tay. Um, I'll make videos. Um, just watch the links I sent in the chat for now. Type for sure, bro. I appreciate you, Easy. Hold on. You with me? Do I know you? I be recognizing names like I remember who's who. I be knowing who's who. Um, but you should be VIP though. You're not VIP. Veteran role. Are you? You aren't. I'll make you veteran role. It's nothing crazy. It's just to let me know like if your name is green, then it means that like I'm cool with you. That's all. I may not remember why, but if I made your name green, then it's like I'm cool with you, and I know that I'm cool with you, so I'll treat you accordingly. And so it's like I see your name all the time, and like I know who you are. All right, all right, guys. Thank you for joining me today on the live stream. I appreciate you for rocking with me. Watch my YouTube videos. If you're in my Discord, um, give me some feedback, some advice. Type some questions in the chat that I can answer either on the spot or in a video or something like that. And then yeah, I'll keep dropping. If you're not VIP, you're not gonna get my analysis. Don't worry about being VIP right now. I'm still trying to restructure some things, but and if you are, great. But anyway, it's like it doesn't matter at this current specific moment. I'm about to overhaul some things. But yeah, ask me some questions in the Discord, chop it up with me, and I'll see y'all tomorrow. And just be another day to make $1,000. Big shit, bro.